Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and Moody yet again downgrades their forecast as far as the pricing decline that we're about to face. Now, they have increased their pricing declines, guys, get ready for this, to 30%. That's right, 30% decline is now what Moody's is calling for, which exceeds the declines that we had back in 2008, which were around 19 to 29%, depending on what data you look like. So regardless, you guys, we are now starting to see so many signs that are telling us that the price crash this time around will be worse than 2008, and predominantly because of the way the housing market was created, which was artificially created through stimulus and low interest rates. So as soon as we took that away, the housing market is crumbling right before our eyes. And case in point, July had the fastest equity deceleration in our history. So you guys have a strong heart. If you're like me on the sidelines that are waiting to purchase a home at a more affordable price, because that's right around the corner. And now we have many analytic firms now confirming the same thing. But regardless, you guys, we're going to jump into a Fortune article and we're going to explore a housing market map just to see what metro areas are overvalued and what metro areas that we can count on to have a significant price decline. So we're going to go into that today, you guys. The name of the article is titled, "These 210 bubbly housing markets could crash 25 to 30%. Moody again slashes its home price forecast." And you guys know I just made a housing market crash map video. So a week later, I'm having to make another video because the information has already changed. This is exciting stuff, you guys, and I hope you're getting excited too. Now, remember, you guys, I'm not your financial advisor. I'm not your realtor. I'm not your loan officer. Even if I want to be, even if you want me to be, there's a process for that. And if you have any questions, just email me. But this is my personal YouTube channel. So do me a favor, you guys, please like this video, subscribe if you haven't already, and shoot me a comment below. I absolutely love hearing from you guys. We are a one big community here at Real Estate Mindset. So please comment for other people. There's a lot of people reading your comments, and I'm just one person. I'm just a normal person. It's you guys that are making me stronger. So thank you for that. Let's jump into the article and check out the map right now. So we got to read a little bit before we dig in deeply to the map, guys. So here's what this says. We're already seeing it. On Tuesday, we learned that mortgage purchase applications fell 13% last week. That's starkly sharper than the 1.1% decline we saw in the previous week. The difference? Last week's 13% mortgage purchase application decline coincided with the first weekly 7% mortgage rate since 2002. Sure, historically speaking, there's nothing abnormal about 6 or 7% mortgage rates, but the numerical rate overlooks the impact of the ongoing mortgage rate shock. These rates, coupled with frothy home prices, put new monthly payments in the upper bounds of history. When accounting for income, it's more expensive to buy now than it was at the height of the early 2000s housing bubble. The heightened affordability crunch already has economists and housing analysts alike downgrading their U.S. home price outlooks. Look no further than Moody Analytics. In August, Moody Analytics expected U.S. home prices to fall between 0 to 5%. In September, 5 to 10%. But on Wednesday, it once again slashed the forecast. Heading forward, Moody Analytics now expects peak to trough U.S. home prices to decline a solid 10%. And you guys, here's what's really important about Moody. They're saying as a nationwide average, he's still saying in the most overvalued metro areas, there's still going to be a decline of 30%. And what I believe we should keep our eyes on as far as which metro area is going to crash the first and what metro area is going to crash the hardest, I believe the things that we need to look at is new construction, investor share of the market, and migration. I think those are the three factors that are really going to crash a local housing market. And that's why I'm looking at, closely looking at Boise, Las Vegas, Phoenix, Austin, because those are probably going to be the cities that get hit the hardest and first. Let's jump back into the article right now and take a look at the map. Moody Analytics baseline forecast assumes no recession. If a recession does manifest, Moody Analytics now expects a peak to trough U.S. home price decline between 15 to 20%. So he's saying from 15 to 20% if we're in a recession. That's not too far off from the 27% U.S. home price decline that we saw in 2006 to 2012. So that's very fascinating, you guys. And obviously we have overwhelming amount of economic data now that is suggesting that we're absolutely in a recession. But what's really interesting is I heard that Q3 is actually going to show positive GDP. So I don't know what trickery that is, but let's look at some of these areas, you guys. Let's start with California. Now, California appears to have a rating of 27.05 as far as overvaluation, and that looks really overvalued in Riverside, San Diego, and Los Angeles. And you guys know that I believe of those three, San Diego's in the worst shape, although Riverside is showing the most price declines right now, which is very interesting. Also in California, Santa Maria. We also have some Bay cities that are overpriced here. Obviously, here's Sacramento as well. And obviously the West Coast over here is also super overvalued here in Oregon, as you can see. Also Washington. I don't know why Washington's so overvalued, but it is. Look at how overvalued. Bellingham is overvalued by 58.32. Now, the most overvalued is obviously Boise. I don't know who to pick as far as the number one city yet, but I could tell you that Boise is looking like the most overvalued city in the nation right now with a rating of 76.9. Now look at over here. Look at Las Vegas. Las Vegas is also experiencing some meltdown as well, but Las Vegas is rated at 59.17, so super overvalued. Lake Havasu as well. I had a lot of fun in Lake Havasu when I was a kid. Also Arizona. Look at Flagstaff, you guys. I didn't realize how overvalued Flagstaff was at 65.58. You know, so also Phoenix obviously is in bad shape, as you can see. So Arizona is going through a lot of bad stuff, guys, but also look at Utah. Salt Lake City is overvalued as well as Ogden is being overvalued. So a lot of places obviously are super overvalued, as you can see here, you know, a lot. And look at Denver, you know, Denver, Colorado, you know, here's Colorado. So look at Colorado. Colorado is very overvalued as well. You know, super overvalued. So this is widespread. Here's New Mexico right here. Take a look at Texas, guys. This is where I live. Look at Houston. Houston's 40 point, it has a rating of 40.85. That's insane. And look at Dallas is at 52.07. You know, so a lot. Look at Austin, you guys. Austin's super overvalued at 61.1 as well. San Antonio's on here. And also take a look at New Orleans. Now, I think New Orleans can possibly be the worst shaped city, but the overvaluation doesn't compare to the other cities we went over. But New Orleans is super overvalued. But look at Florida. I mean, almost the entire state of Florida, you guys, is overvalued. There's going to be some substantial price crashes in Florida. That's a fact. I mean, the whole state is messed up. Even the Panhandle, Panama City, you know, Fort Walton and Destin. Pensacola's up here. I love Pensacola. I love this whole area right here. I love fishing here, but it's all overvalued. Now look at this. Look at Georgia, also overvalued. A lot of places in Georgia, South Carolina as well. You know, pretty much all, you know, North Carolina, all the coastal cities, you know, are also. Boston is overvalued at 20.4. So not, you know, as overvalued of other cities, but Portland's up there as well. You know, look at this, guys. So this is a very cool interactive map, and I will have this in my description. But the thing is, guys, if you're, you know, if you can pick a place to move, if it was me, I'm keeping my eyes on the overvalued cities, because that may be where I want to purchase and find a home that is very affordable or more affordable, or maybe I want to invest in it. But keep your eyes in those areas. And again, I'm going to do a separate video that goes into new construction, migration, and investor shares, to just really figure out what is going to happen first, who's going to crash first, because we got, you know, here's the wild card, New Orleans. New Orleans right now is in worse shape from a year-over-year price growth standpoint. So it's very shocking to see these numbers right now. But again, you guys, let me ask you something. Comment below and let me know what your feelings are about a recession. Do you guys think we're in a recession? Do you think we're going to go in a recession? Leave me a comment below. You know what I think already. Regardless, let's finish out this article right now. Here's some final points that the article makes. When a group like Moody's Analytics says U.S. housing market or U.S. home prices, they're talking about an aggregate view of the country. Regionally, the results also vary. In the eyes of Moody Analytics, that'll be particularly true heading forward. So it's very, very market specific, guys. In a significantly overvalued housing market, Moody Analytics now forecast that home prices will fall between 15 to 20% if a recession hits, and in the most overvalued area, 25 to 30%. Each quarter, Moody Analytics assesses whether local fundamentals, including local income levels, can support local house prices. If a regional housing market is overvalued by more than 25%, Moody Analytics determines it's significantly overvalued through the second quarter of the year. 210 housing markets, including Boise, overvalued by 77%, and Las Vegas, overvalued by 60%, fell into that significantly overvalued camp. So this is also an interesting chart here, guys, that really compares the overvaluation to 2008, 2007. Let's take a look at this. When a housing market enters a downturn, a period of falling home sales and home construction levels is usually frothy or bubbly housing markets that are at the highest risk of home price declines. So the bubbly housing markets obviously are going to have the biggest price declines, but this chart is very interesting, you guys. Now, obviously up here is, let me read this. Now, this chart is very interesting. To the degree of which regional home prices are overvalued or undervalued. So essentially, this is showing us that right now we are as overvalued as we were back in 2009. We're not quite at the peak, which is up here. But regardless, you guys, there's a lot of overwhelming data right now that is basically pointing out that we are overvalued. And again, we're overvalued because the market was artificially created by stimulus and by low interest rates. So when we take that out, obviously the housing market is going to come crumbling down. So I, again, am saying I believe that this price crash will be worse than 2008. Now, I don't think the foreclosure crisis will be worse than 2008, but I certainly think that a price crash will be worse. Now, there's two things that I really want to end on, guys, and really want to hammer in on. Now, number one, what we're going to really want to look at to determine whether or not an area is significantly overvalued is new construction going on, investor shares, and mass migration. Because when unemployment starts hitting, layoffs starts hitting, if rent goes down, obviously there's going to be a ton of owners that are in super bad shape. Now, number two, what I really want to hammer, what do you do with this information? I'm going to tell you guys, you have to double down right now if you're going to be a winner. You need to stay ahead of unaffordability and you need to stay ahead of all of these investors. How do you do that? Become an expert in your local housing market, save as much cash as you can, have as great a credit score as possible, and make sure you're out of consumer debt, you're spending right, and you pick up as much income as possible. And that, you guys, is how you become a winner on the other side of this. Now, other than that, you guys, I really hope you guys got value from today's video. If you can, shoot me a comment below. Let me know what value you got from today's video. And if you're out there investing in real estate, I do wish you luck and I hope you win.